All right, let's unpack this. Today, we are diving deep into a company that is, well, absolutely central to the world of modern software. You know, the kind of data platform that powers the applications we rely on every single day, and increasingly those AI applications that are just starting to take shape.
Exactly. The data is really the foundation for everything digital these days, isn't it? And having the right database technology is, well, it's no longer optional. It's pretty much a competitive necessity.
Right. And based on the source material you've shared with us, we are doing a deep dive today into MongoDB Inc., ticker symbol MDB.
That's the one.
And our mission, to really get inside the numbers, understand the core business drivers, look at the opportunities and the challenges they're facing, and really zero in on the key things someone following this company should be watching right now.
Yeah, and the sources give us a fantastic view. It's fresh off their latest earnings report. This is for the first quarter of their fiscal year 2026, which actually ended back on April 30th. So we've got the financials, product details, customer trends, what management's saying, and the competitive landscape, too. It's a pretty rich set of information to dig into.
Excellent. Okay, let's not waste any time then. Let's jump straight into those Q1 FY2026 headline numbers. What's the snapshot look like?
Okay, so on the top line, they reported total revenue of $549 million for the quarter.
$549 million.
Yeah, and that's a 22% increase year over year, which is, solid growth.
And the sources point out that wasn't just solid, it actually came in ahead of what analysts were expecting, right? They were closer to maybe $528 million. So a beat on revenue.
A meaningful beat, yeah. And the profitability picture, that was even stronger relative to those expectations. Their non-GAAP earnings per share came in at $1.
Wow, $1 non-GAAP EPS. When the street was expecting, 66 cents? That's quite a gap.
It really is.
What about the GAAP net loss? Are they still losing money on that basis?
On a GAAP basis, yes, they are still incurring a loss, but it narrowed considerably. The net loss was $37.6 million in Q1. That's a big improvement from the $80.6 million loss they had in the same quarter last year, so you can definitely see that trajectory towards improving profitability.
Got it. So what were the key ingredients in that beat, according to the sources? What specifically drove that outperformance?
Well, the primary driver, no surprise really, was continued strength and growth in MongoDB Atlas. That's their cloud database offering.
Right.
We also saw some flow-through from improved operating margins. And interestingly, management highlighted achieving their highest total net customer additions in 6 years.
6 years? Wow.
Yeah, adding approximately 2,600 new customers just in Q1. And they mentioned strong performance, particularly from their self-serve channel.
Highest net customer adds in 6 years. That's definitely a standout metric in this kind of environment. What about cash flow?
Very healthy free cash flow generation. They produced $105.9 million in Q1, which is up significantly from $61 million a year ago. So that indicates, good efficiency in converting that revenue into actual cash.
Now, I saw a note about gross margins in the sources. Was there a slight dip there? Or?
Yeah, good catch. Their non-GAAP gross margin saw a slight sequential and year-over-year dip. It went to 74% from 75%.
Okay.
Management attributed this mainly to the increasing mix of Atlas revenue. That involves cloud infrastructure costs and also some impact from the recent Voyage AI acquisition. The margins are still very strong, obviously, but it is a point they called out.
Okay, so the headline is a clear beat on revenue and profitability, driven by Atlas strength and those impressive customer additions. What's the key takeaway from these numbers for someone following MongoDB?
I think the Q1 results really demonstrate strong operational execution and resilient demand for their core product, Atlas, even within what's been a sometimes uncertain macro environment.
Right.
Beating expectations this meaningfully, and you combine that with accelerating customer acquisition, it really suggests the business has solid underlying momentum right now. So that's a pretty positive tone for the rest of the year, I'd say.
Okay, you mentioned Atlas as the primary driver. Let's shift gears then and really unpack MongoDB Atlas. It seems like that is the business for many users today, isn't it?
Oh, absolutely. Atlas is the engine powering their growth. Simple as that. In Q1 FY 2026, it represented 72% of their total revenue.
72%.
Yeah, up from 70% last year. And maybe even more importantly, its growth actually reaccelerated to 26% year over year in Q1. That's up from 24% in the prior quarter.
A reacceleration in growth, that's definitely notable. What specific factors are fueling that Atlas expansion? What's behind that?
Well, the sources point to several things. Existing customers are definitely using Atlas for more workloads, so they're expanding their footprint.
Okay.
New customers are increasingly just starting directly on Atlas from day one, skipping the older stuff.
Makes sense.
They're also seeing migrations, from older on-premises versions of MongoDB onto the cloud platform. And I think fundamentally, Atlas is just designed for the kind of data demands you see with modern cloud-native, real-time, and increasingly AI applications.
And here's where it gets, well, really interesting with Atlas, its multi-cloud capability. That seems key.
This is a critical differentiator, absolutely. Atlas is available across AWS, Google Cloud, and Microsoft Azure. I think it spans over 115 regions globally now.
So why is being multi-cloud such a big deal, especially for, say, larger enterprises?
Well, it offers tremendous flexibility and control. Enterprises can avoid being locked into just one single cloud provider, which is, a major concern for many these days.
Right, vendor lock-in.
Exactly. They can optimize performance by deploying data closer to their users or applications, using whichever cloud is most suitable. It enhances resilience, disaster recovery options, and perhaps most crucially, especially for global companies, it's vital for data governance and compliance.
How does it help with compliance specifically?
So features within Atlas, like the ability to restrict data to specific cloud regions, or they have something called global clusters with location-aware sharding, that helps companies meet really strict data residency requirements in different countries. Think about GDPR in Europe, for example. This multi-cloud compliance-aware architecture really makes Atlas uniquely appealing to those large, geographically dispersed organizations.
Okay, so when we look at Atlas and its multi-cloud strategy, what's the key takeaway for you listening right now?
I'd say Atlas isn't just a product, it's really the core strategic asset for MongoDB. Its continued strong growth, that slight reacceleration we saw, and its unique multi-cloud position. Those are the main drivers of their current success and, frankly, their future potential. Understanding Atlas is really understanding the company's competitive edge.
Okay, let's look at the customer side then. We talked about those record net additions, but what about the overall base and how they're, expanding their usage?
Right. So they finished the quarter with over 57,100 total customers.
57,000.
Yeah, and the vast majority, over 55,800, are using Atlas. And like we mentioned, adding 2,600 net new customers in Q1, that was the highest rate in over 6 years. That really shows broad market penetration, especially as they noted via that efficient self-serve model.
And critically, it seems they're not just adding new customers, they're growing pretty well with their existing ones too.
Mm-hmm.
The Net ARR Expansion Rate was around 119%, I saw. What does that tell us?
Yeah, a Net ARR Expansion Rate comfortably above 100% is always a powerful signal. At 119%, it basically means existing customers are significantly increasing their spending over time.
Okay.
They're adding new projects, migrating more workloads, just consuming more of the platform's resources. It indicates, customer satisfaction, shows the platform's ability to handle growing needs, and it provides highly efficient organic revenue growth. It really shows the product is sticky and delivers increasing value.
Can you give us maybe a couple of specific examples from the sources of how customers are actually using MongoDB? Bring it to life a bit.
Sure. The sources highlighted enterprises like CSX, the major railroad company. They migrated mission-critical operations to Atlas for real-time monitoring.
Interesting.
Startups are using it for scale, too. Like Zepto, a quick commerce platform. They moved from Postgres to Atlas, specifically to handle massive transaction volumes and reduce latency.
Right.
And in the AI space, which we'll talk more about, a customer like LGU Plus in South Korea is using Atlas Vector Search to build AI agent assist applications, leveraging MongoDB's capabilities for, providing relevant context.
That range of examples from core enterprise systems to fast-growing digital businesses and these new AI use cases, it really shows the breadth of the platform's applicability, doesn't it?
It really does, and it reflects their kind of dual go-to-market strategy. You have the efficient, high-volume self-serve channel for getting customers in the door, paired with a focused direct sales effort to really land and expand within those large enterprises.
So the key takeaway then from this customer momentum picture?
I think it's the combination. It's that accelerating new customer acquisition plus the robust expansion within the existing base. That paints a very healthy picture of demand and product stickiness. It shows they are winning new logos and growing effectively with the ones they already have.
Okay, let's pivot slightly to their financial health and how they're thinking about capital allocation. I notice in the sources they have a pretty substantial cash position.
They certainly do. As of the end of Q1, they had approximately $2.5 billion in cash, cash equivalents, and short-term investments sitting on the balance sheet.
$2.5 billion. That's a lot of cash. How are they planning to deploy that capital? What are the priorities?
So their stated priorities, and they listed them in order, are first and foremost investing in organic growth. So funding R&D, sales expansion, product innovation, particularly focused on Atlas and those AI capabilities.
Makes sense.
Second is returning capital to shareholders, mainly via share repurchases. And third, they said they might consider small strategic tuck-in acquisitions that could augment their organic efforts, but that's clearly not the primary focus.
Okay, and that share repurchase program is pretty significant, isn't it? The sources mentioned they expanded up to $1 billion now.
Yes, that's right. They added $800 million to an existing $200 million authorization, bringing the total up to $1 billion. That's definitely a strong signal from management.
What exactly is management signaling with a $1 billion share buyback authorization like that?
Well, typically it signals strong confidence in the company's future prospects and potentially a view that maybe the stock is undervalued at current levels. It's a direct way to return value to shareholders, and it can also be accretive to earnings per share over time just by reducing the number of outstanding shares.
Did they actually buy back any shares in Q1, though?
No, they didn't. Management explained this was mainly due to restrictions they had related to the ongoing CFO search during the quarter.
That's right.
However, with the new CFO now in place, they explicitly stated on the call that they plan to be active in the buyback program starting in Q2.
Okay, the new CFO. Tell us a bit about Mike Sikos and the expected impact of his arrival. It seems like a notable event.
Yeah, Mike Sikos joined as CFO shortly before the earnings call. He comes over from NetApp, has a strong background in driving profitable growth, particularly in the software sector.
Okay.
And analysts noted that his appointment, bringing in a seasoned executive with this kind of focus likely removes some overhang or uncertainty that the CFO search might have created. His stated priorities seem to align perfectly with where the company is heading: operational excellence, enhancing cash flow, driving margin improvements.
And we actually see that focus reflected immediately in their raised full-year profitability guidance, don't we?
Exactly. They raised their full-year non-GAAP operating margin guidance by a significant 200 basis points at the midpoint. They're now targeting 12%. That's a pretty tangible commitment to improving efficiency and translating that top-line growth into stronger bottom-line results. Seems like a key focus area under the new CFO.
Okay, so the key takeaway here regarding their financials and capital allocation.
I'd say it's a robust balance sheet with significant cash giving them strategic flexibility. The large share buyback signals strong management conviction and a commitment to shareholder value. And the new CFO's arrival, coupled with that raised profitability guidance, indicates a maturing company that's prioritizing financial discipline and efficiency alongside continued growth.
Right. Now, one of the biggest macro themes everyone is talking about is AI, obviously. And MongoDB is clearly trying to position itself within that trend. What's their AI strategy based on the sources?
So MongoDB's core argument is that their flexible document data model and their unified platform are ideally suited for the kind of complex and diverse data that modern AI applications need. Handling unstructured data, vector embeddings, and integrating all that with operational data, they really aim to be the go-to data platform for building these new AI-powered applications.
And they made an acquisition recently, Voyage AI, that fits into this picture.
Yes. Exactly. The acquisition of Voyage AI is directly related to that strategy. The sources explain that Voyage AI's technology helps provide accurate, sort of grounded context to large language models, LLMs.
Right.
The goal is improving the trustworthiness of AI outputs and reducing those common issues like hallucinations, basically by giving the LLMs relevant data from a company's own internal systems.
However, I also saw in the sources that some analysts, I think Loop Capital was mentioned, expressed concern about the AI tailwinds maybe being a bit sluggish or emerging slower than expected for MongoDB. They even cited it in a downgrade, I believe. How does management address that perspective?
Yeah, management definitely views AI as a significant long-term driver and tailwind. They believe the platform's architectural advantages will make it essential for AI development over time. But they also acknowledge that enterprises are still very early in their journey with actually deploying production AI applications.
Yeah.
They see barriers like internal skills gaps, the need for trust in AI outputs, things like that are slowing down adoption right now.
So what's the anticipated revenue impact from AI in the near term then, say, for this current fiscal year?
Well, management kind of tempered expectations there somewhat. They stated that the near-term revenue impact from AI is expected to be only modestly incremental in FY 2026.
Modestly incremental.
Yeah, which aligns more with that cautious analyst view you mentioned. The significant revenue uplift from AI is seen more as a future opportunity, not a major driver of growth this year. Their current focus seems to be on enabling customers to build custom differentiated AI applications using their platform.
Got it. So the key takeaway then on the AI opportunity versus the reality right now.
AI is clearly a massive long-term opportunity, and MongoDB is making smart strategic moves, enhancing the platform, acquiring Voyage AI to position themselves strongly as that crucial data layer for AI apps. However, the sources definitely suggest that translating this positioning into substantial near-term revenue growth might take longer than some might hope. It aligns with the reality that enterprise AI adoption is still in its early stages. So it's really a long-term strategic bet that investors need to monitor closely for tangible signs of adoption and actual revenue contribution down the line.
Okay. Now, no company operates without challenges, and the sources outline a few key ones for MongoDB. What are they wrestling with on that front?
Well, first, there are those persistent macroeconomic uncertainties. Management mentioned things like global tariffs, the general economic situation. These can impact customer consumption on Atlas because it's usage-based.
Right.
They actually saw some softness in Atlas consumption back in April, though they did say it rebounded in May. But this kind of macro sensitivity definitely adds volatility.
And their older sort of legacy on-premises business continues to be a bit of a headwind, right?
Yes. The sources indicate their non-Atlas business, which is primarily enterprise advanced, is expected to decline in the high single digits % range this fiscal year, FY 2026.
Okay.
So as they successfully migrate customers over to Atlas, this older segment naturally shrinks, and that acts as a drag on the overall company growth percentage figure.
Right. Makes sense mathematically. And then there's the intense competitive landscape. I mean, this is the database market. It's got some huge players.
It absolutely does. They compete fiercely with the database services offered directly by the hyperscalers, AWS, Google Cloud, Microsoft Azure.
The big three.
Exactly. They also face competition from traditional relational databases, especially PostgreSQL, which has become quite popular and has added features like JSON document support and, more recently, vector search capabilities.
So competing on features.
Right. Now, management's argument is that MongoDB's native architecture is superior for modern workloads compared to competitors just bolting on features, but it's a constant battle to prove that differentiation value. And of course, the broader open source database community always provides alternatives too.
And we've seen some of these challenges maybe play out in the stock price volatility, like that sharp drop after their Q4 guidance back in March.
Exactly. The market reacts very strongly to any changes in growth expectations and perceived competitive pressure. That Q4 guidance disappointment, which was partly due to macro factors, but also factored in that non-Atlas decline, it hit the stock pretty hard.
Yeah.
And analyst sentiment is, well, it's mixed. Some see the competitive pressure maybe eroding their moat, while others feel the stock drop might have priced in many of these concerns, despite what some analysts are terming ongoing woes regarding, how strong that differentiation really is.
Okay. So what's the takeaway from understanding these challenges and the competition for someone following MongoDB?
I think recognizing these risks provides crucial context. The pace at which Atlas growth can really overcome that non-Atlas headwind, how effectively they can defend their differentiation against increasingly capable competitors like PostgreSQL, and just their ability to navigate macro volatility, those are really key factors that will influence future performance and how the market perceives them.
Okay, let's wrap this up by looking ahead then.
Right.
We covered the Q1 beat and the raised guidance. What's the forward outlook? And importantly, what specific things should someone watching MDB really be monitoring closely?
Right. So management did raise their full year FY 2026 guidance. They're projecting total revenue now between $2.250 billion and $2.290 billion. And they significantly raised that non-GAAP EPS guidance to $2.94 to $3.12.
Okay.
This incorporates the Q1 beat and definitely suggests increased confidence, although they did temper it by saying they remain prudent given the ongoing macro uncertainty.
And they mentioned some specific near-term headwinds that are factored into that guidance.
Yes, they did. For Q2 specifically, they expect a sequential decline in that non-Atlas revenue. For the full year, they cited about a $50 million headwind related to the timing of multi-year license revenue recognition, which mostly impacts the second half of the fiscal year.
How does that work?
It's essentially less revenue from certain long-term deals being recognized in the back half compared to the prior year, just due to accounting rules. And they also noted that planned investments in Q2 might cause a slight dip in operating margins before they expect them to improve later in the year.
Got it. But the long-term ambition, that remains pretty high.
Oh, absolutely. Management's stated vision is for MongoDB to become the standard data platform for all modern and AI application development globally. That's the big goal.
Okay, so bringing it all together then, what are the absolute key things, the bullet points maybe, to watch as this story unfolds?
All right, first, definitely continue to monitor that Atlas growth momentum. Can they maintain or even build on that Q1 reacceleration we saw? That's crucial. Second, look for tangible signs that their AI strategy is moving beyond just positioning and actually resulting in material revenue or, accelerated adoption of AI-specific features.
Evidence.
Evidence, exactly. Third, track their progress on operating margin expansion and that path towards consistent GAAP profitability. The new CFO's focus here is really key.
Okay.
Also, pay close attention to the competitive landscape. How are they really differentiating against the hyperscalers and, notably, a rapidly improving PostgreSQL? Watch the execution of that $1 billion share buyback program. How active are they going to be, particularly now in Q2? And finally, just keep an eye on the broader macro environment. We know it directly impacts that Atlas consumption.
And despite all those challenges, the opportunities we discussed earlier, they remain pretty significant too.
They absolutely do. The massive market for application modernization, the huge runway they still have to expand within their large enterprise customer base, and just the undeniable secular trends towards cloud-native development and AI-powered applications, those provide significant potential tailwinds for long-term growth.
Okay, so that's our deep dive into MongoDB based on the sources. They delivered a strong Q1, they raised guidance, showed record customer additions, and seem to be sharpening their focus on profitability and shareholder returns under a new CFO and with that large buyback program. They're making their big strategic bets on Atlas and AI for the future, but they're also clearly navigating some real competitive pressures and ongoing macro uncertainty.
It really is a fascinating balance, isn't it? Between aggressive innovation, smart strategic positioning, and this increasing focus on financial discipline, all happening in a very dynamic market.
Which leaves us with this provocative thought drawn from the source material for you to ponder. Can MongoDB's core architectural advantages, particularly its native document model and that flexibility for diverse data that AI needs, can that create a truly durable, long-lasting competitive moat against rivals like PostgreSQL, who are actively rapidly adding similar features? Or is that gap actually closing, making the competitive threat maybe more fundamental over the long term?
That really is the central tension, isn't it? How sustainable are those technical leads when the competition is evolving so quickly? It's the key question.
A critical question indeed. Well, thank you for providing the sources that allowed us to take this deep dive today.